Welcome back to Insta everyone. So I'm going to go with you guys in the S&P 500 again, having a major gap down after Powell mentioning that we may not have a Fed pivot unless we get more data on a decrease in inflation. We have another CPI. Again, this is our inflation report coming out before our September Fed rate hike. And again, this needs to be below 8.5 to have a possible anticipation leading into our September Fed rate hike. On that bounce back here in the market for, again, that possible anticipation leading into September's Fed rate hike. Now, before I jump into this, all I ask in return is you smash that like button and hit subscribe if you want to see more chart updates on potential breakouts that I mention every single day throughout the week. So let's jump into this one. So jumping into the daily chart with you guys here on the SPY, as you guys can see, again, we did get a cool down from anticipating Powell last week. As you guys can see, we jumped out of overbought territory, mentioning that we were losing momentum to the upside. And lastly, our relative strength, as you guys can see, we are jumping out of overbought territory. This is very key because this could mean that we have room to run to the downside. We could even come possibly down and sure enough getting a pullback and then leading into Powell. As you guys can see, we got an engulfing candle, again, dropping the body of our candle completely over our previous candle to the downside, showing us that engulfing candle to the downside. So we did have a continuation on lower. We are now dropping the body of our candle just below our point fib line. So again, we are going to be looking, in my opinion, for a possible bounce at our 0.82 fib line. Again, we have a range between 388 and 391. I would be looking to see if we can get that bounce here. Again, that confirmation on that bounce would be a possible hammer candle coming out. As you guys can see, we could have, again, 1/3 of the wick. This is the body of the candle. 1/3 of the body of the candle coming within 2/3 of the wick larger than the body of the candle, showing us that rejection to the downside, getting that possible bounce here and respect here on our 0.82 fib. Or we could be possibly looking for an engulfing candle once again to the upside. So again, getting a body of our candle coming out, and then the next body of our candle would have to be, again, completely covering our previous body of our candle, not exactly the best squares, or looking for, again, that rejection to the downside with a hammer candle coming out to the downside, looking to see if we can get that rejection. That is the confirmation I'll be looking for confirmation from this level here at 0.82. As you guys can see, we do have our EMA lines dropping now just below our median of MACD with the 12 EMA. However, with our 26 EMA, we still are above the median of MACD, showing us that we still could possibly continue if we do get that decrease in sell pressure and possibly get more in consolidation mode. So again, we're looking for that white shaded line to come out here. Again, we are getting another solid red bar like we mentioned yesterday. We need a white shaded line to come out once again to show us that we are getting a decrease in sell pressure to the downside. And for now, again, getting that continuation on an increase in sell pressure. We're going to be looking for that possible decrease in sell pressure leading into this 0.82 fib. And as you guys can see, again, jumping out of overbought territory that we mentioned last week as we were leading into Powell. And as you guys can see, now dropping below the median of our side. We mentioned that we were dropping below into lower lows, showing us that we had a lot of bearish momentum at this time. And looking at our Bollinger Bands, again, representing compression and decompression. As you guys can see, we are getting decompression to the bottom end of our second deviation here, getting the body of our candle still jumping in to our second deviation, showing us that we are still pushing to the downside, looking for that possible rejection again on the lower end of our second deviation as we would be testing our 0.82 fib here. So we're going to see if we do again get that bounce at about 388, 391, again, that small range that we have here. So we're going to see if we do again test this level, get that confirmation to the upside. Now, as far as swinging to the upside, if I was looking for a possible reversal here, again, getting that confirmation on this bounce would be one move, but then the next move would be looking to see if we can get confirmation on an inverted head and shoulder here. Again, getting our shoulder, our head, and our shoulder. A lot of people predicting that the market may just continue on into lower lows. Now, the reason why a lot of people would suspect that we may have room to the downside is because we still have not tested our 200-day moving average, which, as you guys can see, after our 2020 pandemic, we did drop below it. We did get confirmation, continued on above it, continued on with the rally. As you guys can see previously in 2018 leading into 2019, we had a major pullback, tested our 200-day moving average, and then continued on higher. So as you guys can see, we are not testing our 200-day moving average on our weekly chart quite yet. So a lot of people suspect that we may even have a continuation on lower. So again, either getting confirmation on this bounce at our 0.382 fib is going to be what we're looking for, or we're going to be looking for that possible confirmation on a reversal to the upside. That would be the swing play. But again, very much looking for confirmation with our CPI. Again, we do have our previous CPI at 8.5. We want to see if we can get that decrease in CPI, have that possible anticipation. And again, that anticipation could be that continuation on the momentum after we do get a bounce. So we'll see exactly what happens here. We're going to make sure we do get confirmation here. But again, dropping just below our 0.5 fib. We're going to see exactly which level we do hold from here. But again, in the intervals here, I did mention this, that we do again suspect that the market would possibly be testing our 0.382 fib. So we're going to see if that does happen. Again, just staying focused on levels. Now, again, with that said, we do technical analysis on every single volatile breakout that you can imagine throughout the day. Go to instables.com in the description below, and you will never miss a breakout alert today again. And again, all of you instables that come over every single day and support the channel, I appreciate it. When you guys, we're going to continue to go at it, stay patient, take what the market gives us. Again, the market pretty choppy the last few days. We'll see what the market gives us going into tomorrow. We'll continue to stay blessed, and again, just taking what the market gives us, playing safe. We're going to continue to go at it in the instables room. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.